Good evening, everyone. Welcome to tonight's webinar. Tonight we have with us Kong Hao, who will be sharing with us more about the market update, specifically about the US market optimism and how does it affect the Singapore equities market. So just allow me to quickly run through my slides here. Okay, for some of you, you may already know that this series of webinar is part of our Learn from the Pro series of educational webinar that we started sometime middle of last year. And this is a continuation of that to the first half of this year. So under the Learn from the Pro series, we gather market experts to share with us market outlook as well as their specific ways of looking and trading the market. So some of you might have already attended a workshop from Mr. Ho Sing Fu. So Ho Sing Fu did a 4-session workshop on super stocks essential, sharing with us how he trade the market. Also, we have our own market strategies from CGS International, Mr. Trawe Ren, who shared with us his last market outlook for Q1 last month. He'll be sharing with us again in Q2, so do look out for that. And just a quick update on events. For those of you who are interested to attend this particular session, we will be hosting a Money Hero group. Money Hero, for some of you who may not know, is the mother company of Seedly and SingSaver in Singapore, and Compare Hero in Malaysia, as well as many other platforms throughout the region. So Money Hero is a Nasdaq-listed entity, and we'll be having the management share with us more about what the company does and the outlook for the company. So if you are keen, do register for this session, which is happening next Tuesday at 7:30 p.m. via Zoom. Let me also just get you the link. You can scan the QR code if you wish. You can register right now. Also, let me get you the URL for that registration. And I'll put it in the chat box. All right, so the URL registration for Money Hero webinar is in the chat box. So if you're keen, you can register, and we'll see you next week for that. So with that out of the way, let's come back to tonight's session. So like I say, once again, we have with us Kong Hao, who is back to share with us the latest market outlook and what it means for the Singapore equity markets. Before we start, just a quick disclaimer, just so that we know whatever we are sharing is for educational purposes only and does not entails any stock recommendation or trade recommendation. So if you want to do any trade or investment, do your due diligence and also check with your licensed financial advisor. We'll be taking questions for today's session, so feel free to key in whatever questions you have in the Q&A box on Zoom. Try to avoid keying questions in the chat box because that can be quite confusing for the moderator and the speaker to look out for your questions. So as much as possible, try to keep your questions to the Q&A box. And if you wish to ask questions directly, you're more than welcome to just click on the raise hand icon, and we can come to you to unmute you and you can speak directly. So with that out of the way, I'd like to welcome Kong Hao. Just allow me to do a quick introduction. Kong Hao is the founder and investment strategist of his own company, Weipedia Private Limited. Since 1995, Kong Hao started as a floor trader and in CIMB, if you're familiar with the exchange in Singapore. And then he has also done many engagement with CIMB, Eurex, SGX, and Hong Kong Stock Exchange, to name a few. And his company also provides expert witness and opinion writing services in assisting the arbitration process for trading disputes. So he has many accolades. So I'll just end here and welcome Kong Hao to take over the stage and share with us more about how he sees the market right now. So Kong Hao, please go ahead.
Thank you, Nixon. It's always good to be back and wonderful to be with CGS-CIMB, and definitely wonderful to have speaking to the audience tonight on the presentation called Riding the Wind with the US Market Optimism. How will that affect Singapore? So just before the webinar, of course, we did a round of tests, and Nixon asked me a question. Kon, are you, you're very focused on the US market? I say, yes, I am. But the US market are more for trading, are more for short term. But I still love the Singapore market because Singapore market, Asia, especially Singapore market, is for accumulation. That's where the dividend stocks are located. And I do suspect that if US market have headwinds, the focus, when I say focus, is that the global investor, the focus will have a flight to quality. A flight to quality means that if the West got a little bit shaky, which I'm going to discuss about it later on, the money is still out there, the investment money is still out there. You're always looking for safe haven. You may find that Singapore market is not, maybe a selected few will go up, but I can say that in a time of uncertainty, you'll be surprised that that's what I'm foreseeing, that in a time of uncertainty, and we're still living in a time, later I explain to you why then the US market is up, but I'm seeing that there could be a flight to quality. That's where investors around the world may refocus on what is good and what is stable. And I think not just in Singapore stocks, but they also like the Singapore dollar as well. Okay, so I'm just going to get my slide up and let me see, can I share my PowerPoint here? Okay, I hope you can see my PowerPoint. And just going to move some of the taskbar around. Just bear with me for a little while. So this is what we're going to discuss here tonight, riding the wind of the US market optimism. So I'm going to share a few, the 2024 optimism, why the market have went up so much last year into 2024. But also I want to address on the risks. After talking about the three risks, and now we're going to jump into where are the three opportunities. Of course, my focus will be for the Singapore market, and that's the love I have. It's not just because I'm a Singaporean, but dividend stock payout are great. And I believe, again, I'm just going to give you the answer straight away, but as I present, I'm going to unpack bit by bit. And I believe that if the US market, especially US market, going to face some headwinds, the investor around the world, we're going to look for opportunity or flight to quality. The term is, where are the quality stocks? And it's here, it's residing here. Okay, I'm just going to jump straight to it. And tonight, I'm going to tie in two factors, which is the fundamental development or the macro development of what's happening around the US, around the world. And usually the fundamental development, this is what I call the macro analysis. It should set the tone for the next trend to come. Let me just repeat. Usually the macro development, it should, I cannot use the word will. I hope I can use the word will, but it should set a tone for what is about to come. Then what is quantamental analysis is that I'm going to combine both fundamental, which usually set a tone, but the technical will give us the timing. So I'm going to give you some example on the US, how I trade the US market, but later on, you're able to apply that to the Singapore market as well. Okay, just going to get started. So what I'm going to present to you for the next maybe 40 to 50 minutes here is based on what I see and what I understood. And of course, all these are my own conviction. I will definitely get hold of it with a measured risk, calculated risk. But of course, if you feel in sync with what I'm going to discuss with you tonight, please also consult your broker because they're the licensed broker here. So whatever I present to you tonight is an educational purposes and is for my own consumption. Now, let's go to 2024 optimism here. And I think many of us have forgotten about what happened to COVID crisis, which is not that far away. It seems to me like yesterday, because I've been doing a lot of webinar in this room that I have, and today I'm still doing that as part of my work here. So COVID-19, it seems like it was a very scary time for all over the world, but now it seems like so minute movement. Can you see that? Then, of course, we have the pandemic stimulus by the Congress, by the Fed, and that actually turned the whole thing around. Why I want to display the US market? Because the US market is the largest economy in the world. As they move, it also creates some support for Singapore market. So towards the end, I'll give you my conclusion. How will that impact Singapore on this rising wind of the US market or into a headwind of the US market, maybe about to come? So with the pandemic stimulus, we could see that the whole US market move up. And then 2022, which I'm going to focus quite a bit because 2022, there are three elements that set tone into the whole year of 2022, into the whole year of 2023, and the three elements will be the same for 2024 and what to look out for them. Starting from 2022, why the market went down quite a bit there, 30%, it was because of inflation concern. Then why the market rebound? What's the key reason the market rebound? Is because of easing of inflation. Now, I know many of the investors say, no, Kon Hao, it's not the easing of inflation, it's because of the AI rally. And I can say that it is the easing of inflation. Now, later we're going to study through what happened to the inflation market. Because of the easing of inflation in 2023, which was last year, investors are always looking for excuse what to buy next. Of course, the craze for last year flow over to this year is the AI rush, AI hope. Yeah, so it still stay. Now, let me just repeat again in case you missed that. Is this because of the easing of inflation that investors around the world are always looking for excuse what to buy? So for this time round, it was the AI. The last round, can you still remember what was the last round, the hype? Even in Singapore, we talk about it as well. What was a hype before the AI rush? What was the last hype? It was the EV hype. And then what was the previous hype before the EV hype? It was the NFT hype. So yeah, so maybe now you begin to see a bit that what is the anchor reason for the rally for the US market, and Singapore also has a bit of cushion there, is because of the easing of inflation. Let's move on here. Now, we're going to see very closely here is that the inflation hit the high at 9.1%, and that was June 2022. And it eased very quickly to about 1 year from 9.1 to 3%. Now, when you focus on the timeline here, the peak was in June 2022, and then it come down to June 2023. But in June 2022, and that was the bottom of the US market, and it started to rally until today. Can you see that it's because of the easing of inflation? Therefore, investors are always looking for what is there to buy. This time around, it's the AI. So do not get distracted about just the AI alone, but the key foundation of the market is inflation. Let's talk about the three risks. So at least we know that what is the key reason? What's the main fundamental reason for the rally, for the optimism in the US market? It's not just the AI hype, it's the easing of inflation. Now, let's talk about the three potential risks. And since 2022, these three risks became very obvious to me, and it kind of flow over to 2023, and now it also flow over to 2024. What are the three key risks? As we can see here, is the geopolitical tension, inflation, and recession. Now, let me just unpack one by one. First, the key number one risk is already expanding. And we all know by now what happened here is that we have the Middle East conflicts started some months ago. And then it developed to June last year. We have the Red Sea harassment. So you know what happened to the Red Sea harassment. Basically, the Houthis are harassing the ship, the vessel. Now, we have to understand that export in the Asia, the export go through the shortcut called the Red Sea and through the Suez Canal, and we export a lot of product to the European market. So similarly, a lot of European market also export their product to Asia through this route, the Suez Canal, Red Sea to Asia, through this Indian Ocean. But since after the harassment in November last year, now I believe that about half the vessel, if not more, they have to reroute to South Africa, to this port called the Cape of Hope, maybe for some refill, I do not know. Then it go to Europe or the other way for Europe to export to Asia. Now, just by doing this rerouting every vessel, now every day, I do not know, could it be hundreds of vessels or even thousands of vessels passing this through this route? It's one of the busiest route after the Strait of Malacca. Now, so every vessel now, because of the rerouting, have to take at least 10 days and more to export their goods to Europe. And just by doing that, every vessel, the cost has increased, not just a few thousand, I'm talking about tens and perhaps few hundred thousands, depending on the size of the vessel. Now, these are the costs. Ultimately, what will happen to this cost? It will translate down to the end consumer will have to pay for it. So what I'm trying to say here that this geopolitical tension is important to note because earlier I start off with the note where the market rally, it was because of the easing of inflation. Now, because of this geopolitical tension, it's expanded the risk and it caused a lot of vessels to pay more, merchant to pay more. And there's always a delay effect that the end consumer will felt it much later in a few months, half year, sometimes even 12 months down the road. So my observation is this: if this crisis is not going to end anytime soon, inflation may ultimately make a U-turn back up. So that's a risk. Now, again, I'm not suggesting that, I'm not indicating that inflation is moving up. So we have to look at the data, we have to look at the situation. So I'm just giving you the variables that things start to happen. So risk number one is already expanding. And I hope that it will not get worse, but definitely at this point in time, it's not getting any better. That may translate to what about the inflation start to U-turn up? That could be a case. And could it lead to a recession in 2024? I do not know. It really depends on risk number one. How will that lead to risk number two? Because if risk number two inflation start to pick up again, it means that the interest rate will maintain, if not even higher. And what does it mean to listed company or non-listed company or companies that businesses usually will get loan to expand their business? It means that when interest rate remain high or maybe even higher because of inflation, businesses will have to pay more for their borrowings. And that will translate down to their net profit, a reduction of the net profit. Now, I'm not too worried about the risk number three. Many of the analysts forecast that last year there was recession. So the environment kind of mock at them that they are wrong. But I still want to keep that option open because if inflation sustain, that may lead to recession. It could be a delayed recession. So these are the three risks that I'm watching very closely in 2024. And just to recap here is that I'm not suggesting that inflation will pick up. It depends on the data. And we're going to discuss that during the Q&A later on. So even Jerome Powell said that in the previous meeting, that GDP for US expect to cool with the median projection falling to 1.4% next year, which is this year. And if that were to happen, it means that US may enter into a recession. Now, so what we're looking at here, or what I'm looking at here, are these three risks. If either one, which has already happened, number one, or two, translate to two, or three happen together, I would expect for the US market to have greater volatility in 2024. And that may not be a bad thing for Singapore market because I'm suspecting that it could be a flight to quality trading strategy or investment strategy from this hot money to where it's safe, where I assume that Singapore, a lot of investors are seeing that Singapore is a safe haven here. Now, so let me just touch on the US market to trade it, which what I did was since 2022, I recognize that there's this three risks. It flow over to last year, and this three risks still remain into 2024. Now, what are the three opportunities since the third week of 2022? So US market, which I think if this is not the first time you hear me, I'm still going to say that because my strategy have not changed. I trade the US market. Then for the Asia market, I accumulate them. So later on, I explain to you why I accumulate them. And for the commodities market, I buy into them. And I'm going to explain to you what the central bank in Singapore, what they have been doing last year and previous year. Now, let's look at the US market, how I trade them. And I'm going to explain to you how I trade the US market through quantamental analysis. It means that it's a combination between macro analysis, you combine with technical to give me that timing. So now what we're seeing here is that over the last 20 years, since the dot-com crash, you could see that the US market has been slowly, gradually, and exponentially have this very smooth up move. But until the beginning of 2022, everything changed. The market for US became very volatile, which therefore I suggest in the third week of 2022 to trade the US market, where you can see that the whole year of 2022, it was downtrend, and 2023 was uptrend. And what would be for 2024? We will discuss that in a short while. And how will that impact Singapore market? Now, I noticed that since the third week of 2022, market became very volatile. It was because of three things. Now, let's look at these three things here. Now, it was at the beginning of 2022, there are already these three things. Now, I want to focus on this beginning of 2022. There were ongoing geopolitical tension. So where was the first time we heard about this geopolitical tension, especially in 2018, where China and US started their trade war? And in 2022, the beginning of 2022, their relationship became much worse compared to 2018. So there's an ongoing trade war. The market became, at the beginning of 2022, the US market became much volatile, as you could see here. Now, I want to focus on point number two, that was 2022. Yeah. The inflation concern, and since February 2021, that we could see that inflation was below 2%, that it started to rise to 7.53% in the beginning of 2022. So point number one, I saw that. And point number two, I recognized that inflation was exceptionally high since I became a mature adult, since I started working at the age of 23, that I've never seen inflation that high before. I know something is wrong. And at the point in time, the market is still at a high. So I suspect the market was going to be very volatile in the coming year, starting from 2022. And of course, there's a fear of recession because of the post-COVID, businesses start to open up. So from a low base, it went up to 12.5% GDP, but it also crashed very quickly. The GDP come down to 3.7. So there's also a fear of recession. Now, so where did I recognize that the market become volatile? It was starting of 2022 because of this three concerns: geopolitical, inflation, and fear of recession. Now, even for this year, the three key points, I'm still very concerned. That means as an investor, I look out for these three things. So earlier we discussed about the geopolitical tension have expanded to Middle East, and specifically right now has expanded to the Red Sea crisis. And that has impacted many vessels. And all this will have a delay effect that the end consumer will felt it a few months later, maybe half year or 1 year later. Could it be lead to inflation? That one, I'm not suggesting that it will come, but we have to keep watch of all this CPI number every month, all this data. And recession is, I do not think it will come, but we have to watch it very closely. So for the US markets to trade it, and basically, I'm just going to showcase the US market, how I use quantum mental to time the market. Then you can also apply that into the Singapore market. So during the Q&A, if we have time, I may go to my platform and show you how we can plot out all these lines. That why I see that Singapore seems to me is bubbling up, is moving up. Yeah, we're going to discuss that. Now let's look at why 2022? I was basically offloading the US shares and hedging to the US certain instrument there. Now, it was because of if you still remember, I said the third week of 2022, my strategy is to trade the US, accumulate into Asia stock market, and buy into commodities. I'm going to cover one by one. Now, so during the third week of 2022, I have drawn this uptrend line. And later on, I'm going to give you the channel, my YouTube channel link, because I produce a lot of video about how to construct an uptrend line that is qualified to be uptrend line. What do I mean by qualified to uptrend line? It means that if it's being broken, it means that technically I'm seeing a downtrend. Yeah, so on the third week of 2022, I saw that this very nice uptrend line has been compromised, has been broken. And then my campaign began. I start to hedge into the US market, clear some of my US stocks, hedge into it, but I continue to accumulate Singapore stocks. Now, let's look at what happened the third week of 2022. So earlier I shared that I want to combine both fundamental reason and use technical to time the market. Now, let's go back to the fundamental reason. In February 2021, inflation was 2%. Then it climbed to 7.53% in the first day of 2022. Inflation climbed to 7.53%. And earlier I mentioned that as a working adult, for the last, I'm 52 this year, I start working on the trading floor at about, when I'm in 1995, I think I was 23 years old. I lost count of the time. But in my working life, I never come across that inflation is at 7.53%. Now, I want to take note of when inflation hit 7.53, where was the US market at? It was at a high. So I know that something is wrong. Inflation was at 7.53, but US market was at a high. I know that something's wrong. Fundamentally is not right. Now, then I deploy technical to give me the precision of timing. So once it break this uptrend line, I know exactly for this 2022 and onwards, the whole strategy is to sell into strength. So I take every opportunity, every time there's a strength, I will calculate my risk and see if I can hedge into the market or sell the market. And that's what happened to 2022. And all this technique that I share with you, it can be applied to our Asian market, our Singapore market. And let's look at what happened to 2023. So we also discussed about it. And that was during my first sharing after the post-COVID. And that is the first time I started to travel out. That was on the 6th of February, 2023. It's a physical event. In my overseas presentation, I did this presentation. First, let me just introduce you the technical reason. Then I'll back up the fundamental reason why in 2023, I recognize that maybe the market is about to turn bull again, but very volatile. Now, so in the similar concept, we're going to draw a downtrend line. And I will say that this downtrend line is qualified. Again, how do I qualify a downtrend line? Later on, I'm going to give you by this YouTube channel. You can review it, which I explain in great detail how to qualify a downtrend line. Why do we need this qualified downtrend line? Because once it's being broken above, it means that there's a transition of a downtrend to an uptrend. Now, how do I combine the fundamental reason? That was the technical reason. In the beginning of 2023, in February, after Chinese New Year, I still remember. Now, and what we could see here is that when I look at the fundamental data, inflation was right at the highest point in June 2022. It was 9%. And I could see that start to fall to 6.4, which was a good news then in the beginning, January of 2023. From 9%, it dropped to 6.4. I know this good, but you look at where is the market then, it was around the low. And at the point in time, it was much welcome from 9 to 6.4. To me, it's a welcome news that inflation started to fall, but the market is still at the low. The stock market is still at a low, that I knew that the stock market is oversold. Oversold means that there's potential it may move up. Why? Because fundamentally, the inflation has improved. So technically, on the February in 2023, when I flew over to make a presentation, I saw this break. So my suggestion is that if inflation continues to improve, expect the whole year, 2023, to improve. But I didn't guarantee that because I would not know how the inflation data will be. At a point in time, my understanding is from 9 to 6.4. But if it continues to improve, we just have to keep track of this potential uptrend. And that was what I presented on 6th of Feb 2023. And this is what happened subsequently. Now, so the whole idea is that once you recognize that the market is going up, which I believe that Singapore market is trending up, there's a potential. So my focus will be buy on dips. So these are strategies. This is how it's not just look for value, but you also have to time the market. You try your best. I know that some people say that cannot time the market, but you just try your best. You believe that it can be done, but of course, nothing is absolute. You just do your best. To me, it can be done. Now, so talk about the trading in the market. Of course, if you're keen to trade the US market, I'm just going to stop here. Next, I'm just going to focus on the Singapore market. But I just want to give you a sense of understanding here is that quantum-mental analysis, it works wonderfully for me. Means that you have to understand certain macro development. And this will set the direction of the mood of a trend to come. And you utilize technical analysis to time the market. And if you're keen to trade the US market, of course, in SGX, you can visit the ETF. Maybe not so much of it because ETF, I always believe that is for long-term investment strategy. Definitely can consider structural warrant or the DLC available in DBS. And of course, how to deal in all these instruments. You just got to call your broker to advise you how to do that. But hopefully today I give you a good skeleton how to manage your own personal portfolio. If you're adventurous enough, go all the way. Not just buy one stock or two stocks and keep it, but manage it as if you're also Wong or you're Lee or you're Tan. Just imagine that you are the Tan family office. Just manage your whatever, how many thousands of 10,000s of hundreds of thousands that you have. Think big, like although you're not there yet, but just think big. Okay. So now I'm just going to move on to commodities before I touch on the Singapore market. So commodities since the third week of 2022, I say is to buy them. Now, let me just give you some statistic because of just now what I've described that inflation have break the roof. That was at the beginning of 2022. And that's why I call for this mandate on my personal portfolio, trade the US market. That's what we see. And to buy into commodities. Now, where's the commodities today? Is we have to look at the gold market. And the gold market is traded well above 2,000 US dollars. And the rest of the commodities, I'm not too concerned or not too worried. Some of it I have it. Some of it I do not have it yet. But you can see that general trend, whether it's the meat market, the rice market, since COVID is still trending very nicely. But because of the post-COVID, the supply chain have get back to business, the commodity took a dip. But I would view that as a retracement for long-term growth in the commodities market. And especially for gold, and I have this term that gold is the leader of the rest of commodities. As long as gold stay high, the rest of the commodities, based on their time and season, it will pick up ultimately. Now, let me just give you some statistic here, or some technical before some statistic. What the central bank have been doing is that some behavior science study, and I enjoy reading technical analysis beyond just reading a chart. I try to understand what is chart speaking to me. Now, we could see that since about 2011, gold has been trying to break above 2,000, but it kind of failed. Then it went to a retracement that we could see that. And then shortly later, of course, a few years later, we could see that since the COVID started, gold make a very serious attempt to break above 2,000, but it kind of failed. Now, this is a quarterly chart. It means that every bar that you see represents 3 months. That's called quarterly chart. Then as it progressed, that I could see that gold is making some serious attempt again, somewhere around 2022 to break above 2000, and it failed again. And then in 2023, which was last year, it tried again and it failed. But at the last quarter of last year, I saw for the first time in history, that's why I put history making. I never come across, because all this while I was, for a few years, I've been having gold, all sorts, physical gold, ETF, gold mining companies. I'm looking for the main trend to come, because for years, I've been expecting this inflation to pick up, and which it did. And of course, various attempts tried, failed. And at the last quarter of 2023, it finally, for the first time, it closed above 2000 very convincingly. And that set an understanding based on behavior science is that gold moving forward, to me, is quite clear cut, is a buy on dip strategy. And that kind of sums up why on the third week of 2022, I trade the US market and I buy in the commodities market. And I'm not alone. Let me just share with you the next slides here. And this is an article in Straits Times in November last year. And based on this data, it was up to the third quarter of last year. And this data, it represents the central bank around the world, their purchase in gold. And let me just share with you what happened to 2022 and 2023. The central bank has been accumulating a lot of the gold the last 2 years. And mind you that this 2023 is just at the close of the third quarter. It doesn't represent the fourth quarter. I believe the fourth quarter will continue to go up. Now, the headline is that Central Bank of Singapore is the world's third largest gold buyer from January to September last year. Okay, so Singapore also seeing value of the commodities. Now, so we have to understand that what are these central banks doing? If they buy into gold, it also means that they are seeing that inflation is real and maybe here to stay. So that's why I mentioned that at the very beginning, that do not get distracted that this rally is just an AI rally. It is an AI rally, but the fundamental behind this rally for the US market is because of the easing of inflation. But now we look at it, when the central bank put down money to buy physical gold, it means a lot to me. It means that they are seeing something that we have to pay attention to, means that they are seeing that inflation may be here to stay. And towards the end, I'm going to give you a last slide and why I say so. Now, let's look at for Singapore market. So earlier we mentioned about if you want to trade the US market, how to do that. Of course, you can trade the US directly, but of course, you're very familiar with the US Singapore market. You can always go to the SGX, the ETF, structural warrant, or DLC. How about for the gold? This is something that I like. I included the QR code. You can go to this platform in SGX itself, where you can do filter to look for gold mining companies, to look at gold ETF. And I've been accumulating gold ETF since 2008. After 2008, I see the value in gold. I've been accumulating not just one part, not just all of it, but a portion of my whole portfolio. Gold is always in my portfolio. I've been doing that since after the crisis of 2008 until today. Now, let's look at the exciting market here, which is the Singapore market. Asia market, accumulation. Now, let me just share with you this very interesting slide here. And I think if this is not the first time that you hear me, maybe you've been following me for the last few years. Since the third week of 2022, I've been advocating this: trade the US market, buy commodities, and accumulate the Asia market, and especially the Singapore market. Why? Now, we got to see that last year alone. So I'm not that wrong. Last year alone, we saw Nikkei start to move, Taiwan start to move, Nifty start to move, which is the India market, Korean market start to move, Australia start to move, and Jakarta start to move. They're taking turns. And Singapore is quite flat. Okay, not that bad. Later I'll share with you what I mean. Okay, but we're seeing that there's this strategy called the China Plus One strategy. Now, because of this trade war, manufacturing around, businesses around always want to look outside China to partnership with another partner that near China. so that they can continue to do business, whatever the strategy for the businesses, but they just want to keep the strategy is called the China plus one strategy. They still want China, but they also want to hedge into other countries as well. So Singapore is one of the destinations, especially in the financial market as well, and also the technology market also. Okay. Now, so if you have been following my webinar with CIMB here, is that I have this strategy is that I believe in cycle. Every cycle, there are 4 stages: income stage, value stage, growth stage, and followed by decline stage. So after the pandemic, what I look at it, Singapore market became stronger. We are now the tech hub of Asia, financial hub, pharmaceutical and biological hub, trade hub, air hub. And I just attend a function with PM. And what I'm hearing him is that he is very serious about green hub. And he's very determined in 2050 is going to be net zero. And between all this timeline, there will be a lot of development. And that's not a secret, it's in the news. And green hub is a potential. That's what I'm seeing here. So in every cycle, I believe that as sorry. Now, if the US market hits some headwind, my suspicion is that there are always investors and hot money around. They will find there's this strategy called the flight to quality, and I've identified that Singapore market is one of them. Now, how to narrow down to all these stocks is that let's move at the next segment here is this. Now, if you find that stock picking is difficult, one of the straightforward strategies is just buy the ETF. And again, I provide a QR code, but do visit this filter platform of SGX. It's wonderful. So later on, I'll give you some highlight on how to filter the market. Now, so we know that what is a trend? Now, my question to you is that what is a trend for which industry is the trend in the heart of every investor moving forward for the next 5 to 10 years? So most of you will say semiconductor technology because of AI. I think you're right. Now, so if you're going to chase after the US market, which is hot now, which is, I think these are the popular names that I don't have to mention who they are, but you know who they are. But my attitude towards the US market is just to trade them. Getting in and out, it means that for the year 2022, I was out of it. Okay, I was hedging it, I was trading it. In the year 2023, I'm in it again. So just not explaining how I do it. That means I'm getting in and out. But for Asia market, I will want to buy and hold. There's a reason why, because of dividends. Okay, let me just share with you what is the reason for accumulating Asia market. Okay, now I just asked you this question: which industry is gaining the attention, not just last year and this year, which is AI technology, but I think in many years to come, they will stay. AI is just the beginning of fashion. Okay, but I'm more interested to accumulate Asia stock. Why? Because of the macro risk. Just now, there are 3 risks I spoke about, especially the risk number 1 and risk number 2, which is the geopolitical risk leading to interest rate risk or inflation risk. So I need some safe haven. If I'm going to park some serious money, they must pay me dividends. And on any potential downside risk, I suspect that the Singapore market, especially the downside risk, could be pretty limited. But if I'm going to park some serious money in the US market, I'm more interested to trade them. On any headwinds, the downside risk can be quite tremendous. So we have to understand that as an investor, we do not just look at the upside. I'm also looking at I need to protect my downside as well. Okay, now, how do I look at the US market? This is what I see here. For long-term hold, for long-term hold, these are the Magnificent Seven. So you saw all these names, there's 7 of them. I think among the 7 of them, which one paid the best dividends, which is Apple at 3.08%. That was based on last year's dividend. Microsoft, 1.44, not too great at all. And NVIDIA just started paying dividend at about 0.69%. but the rest of the four are not paying dividends. Now, whereas Singapore market, I think is not bad. And how do I usually like to do is that just now I provide a QR code and do utilize this platform that SGX has. That what I do is that what you can do is also is to select the software and tech equipment. It will give you narrow down to many handful of the tech stock in Singapore. Then I will do a very brief selection here just to showcase you. Of course, you can fine tune it with different other selection. Just go ahead to explore it. But let's say I don't want to buy a too small cap company. It must have at least $100 million worth listed here in Singapore. And I also want to select where the dividend will pay me at least about 3%. And why 3%? Because it's very logical is that if I'm going to put my money in bank where they're paying me about 3% now anyway, or 3.4, 3.6 right now, then at least the stocks I purchase, I invest in them, they must pay me a yearly dividend of 3%. So if I'm going to select these two criteria based on the technology stocks and IT stocks with market cap of at least 100 million and dividend 3%, these are the few market it has displayed to me. So I would advise you to look at the chart. So earlier I showcased to you how I deploy quantimeters, means that I look at the fundamental reason. So in this case, you may have to exercise your gift and the ability to look into the micro analysis. Then that case, you have to look at call up your broker to study the ratio, the prospect of each and individual company. Then of course, you may also want to deploy the chart that I just introduced to you, how to look at all this trend line. It works. Now, and I just want to showcase, just now I showcased one of the Singapore market STI. On every cycle, there are 4 stages. Now, so this is also a fintech company, a tech company, but financial tech company. It has moved into a new cycle already, as you could see, but I just want to look at the old cycle. So I just got to repeat this is that every market, there are cycles. And every cycle, there are 4 stages. In this example, we have this range stage or income stage or R&D stage. We have this value stage, growth stage, and decline stage. And I believe all these recording are, I did at the beginning of with CIMB, I did do a lot of presentation on this topic. So you can always revisit the old videos. But now for this fintech company is moving into a new season, is in its value stage. Okay, so you try to practice it on your own, but I'm just going to give you, this is what I see in every market, there are cycle, and every cycle, there are 4 stages. So the best time to invest, when I talk about invest, it means that I invest into a long term. So US market, I'm not investing into them, I'm trading into them. But for Singapore market, I am investing to them. So the best time to invest in any market or any stock is at the beginning of the growth, not towards the end. Now, let me just give you another clue here. If we talk about the NASDAQ market earlier, I believe in patterns, and that's why I look at it. Now, towards the end of this IFAS, during 2022, before it started to decline, can you see that for the last many months, it have stagnated? That means from the start of this period to the end of this period, market has been hovering around the same price at $8. So can you see a similar patterns here in the US market and NASDAQ? For the last 2 years, the market has been moving up, very volatile, but around the same price. So it kind of, it fit into the whole picture here that a bit defensive on the US rally, but now I'm looking very intimately on this macro development, on the geopolitical tension. Will that lead to inflation? And so that's this one, we have to watch it very, very closely. Now, just an exercise for you. So earlier, we based on the filter of the SGX platform, the $100 million market cap and the 3%. So these are the 6 or the 8 stocks that I've listed out for you. You try to identify which particular stock draw my interest, where it is at its value stage right now. Just take a few seconds to take a look. Just based on patterns recognition, then if you have time, you drill into the fundamental reason, the micro analysis. You will speak to the broker. What is its development? Now, I kind of like Valuetronics, just based on pattern recognition, and also kind of like venture as well. Again, of course, I do like multicam, but earlier my proposition to you is that as an investor, the best time to invest is at the beginning of the growth stage, not chasing after it. So therefore, I've been accumulating stocks, especially those stocks that paying dividends. So just to sum up, is that why is the central bank around the world buying gold in 2022 and 2023? And MAS, Singapore Central Bank, has been buying, is the third largest gold purchaser of 2023. Why is it so? Now, earlier from the onstart, I say that the key reason for the rally is because of the easing of inflation. So starting 2022, and that's always the key, inflation. So inflation don't seems to be going away, and that's the thing that I'm seeing here. The inflation from 9.1% has been coming down to 3%. That was in June 2023. So today is February, and tomorrow will be March. So the inflation comes down to 3%, but what is Jerome Powell target? He wants to see inflation back down to the good old days at 2%, about there. But for more than half a year by now, the last inflation was at the last low was at 3%. Along the timeline, it went up to 3.7, 3.4, 3.1, and the latest data at 3.1. So I can say that the central bank are feeling very uneasy about holding, coupled with the geopolitical tension that's happening right now, and they know that the costs that the businesses are incurring right now ultimately will pass down to end consumer. So do take note of the data from time to time. And just to wrap things up here, the whole thing about riding the winds of the US optimism is this, that I believe is that there will be a flight to quality. If the headwind comes, that may not be a bad thing for Singapore market. Why? Because investors around the world, they have the hot money. They are always looking for where is the next safe haven, which I have identified Singapore. Just now I identified with you the stages chart of STI. We also narrow down to the tech stock of Singapore. So do take some time to explore all these. For Asian market, I'm accumulating them. It means that I may not see that it may not go up anytime soon, but if it comes, it may come up fast and furious. So these are just some contact points here where do visit the YouTube channel where I spoke a lot about some technical and some macro analysis. Technical, you can visit the trend line, how I plot the, how I qualify those uptrend line and how I qualify those downtrend line. My YouTube channel, the channel is called Invest and Trade with Insight. So this is my website, Weipedia.com. There's a lot of other resources on investment and trading. You can visit them. And this is my contact. So just feel free to leave me a note if you have some ideas about what to invest and trade. And I just want to leave this time to, we have a Q&A. So maybe I'll just hand this time back to Nixon. Nixon, back to you.
All right, thanks, Kong Hao. And this allow me to change my screen share. Okay. So before I go to that, I just want to share the link to everyone on the chat for the Learn from the Pros webpage that we have. So Kong Hao mentioned about the videos that he has done with us. So far, I think for last year, he has done 2 sessions. This year, he will be doing another 2 sessions. And so far, his message to us has always been very, very consistent and still on track, right? So I think it's very, very valuable resource for you guys to also take a chance to go back to the page, because we have uploaded his video, past video recording. And tonight's session will also be uploaded on the web page. So it's also a resource that you can also go back to check on what he has shared since last year. And with that, I also want to share the link for the feedback. So this is something that we do because this program, the reason why we are able to bring Kong Hao on board to share with us is because of this Learn from the Pros educational series or program. And we really need your feedback because your feedback would support and justify us to keep continuing to bring Kong Hao back, as well as market experts to share with all of us their expertise and market outlook for free. So if you can appreciate that you can put in the feedback form, you can see the QR code. You can just scan and give us a quick feedback. And I would also share the feedback URL on the chat box. So really appreciate each and every one of you to just give us a couple of minutes to do your feedback so that we can understand your needs. The next session also, we will share with Kong Hao what is it that you want Kong Hao to share. So the next time it comes, you can also share something that you'll be interested in. And of course, your feedback would support and encourage Kong Hao to keep sharing and also encourage us to keep doing the Learn from the Pro series of webinar. So with that out of the way, I'd like to pass the stage back to Kong Hao to continue the Q&A session. Okay, so Kong Hao, we're back for Q&A, and I can see that there is 2 questions in the Q&A box. So just a note to everyone, feel free to just key in whatever questions you have in the Q&A box, and we will definitely look into them. So let me just quickly go through. Okay, so I'll just take the first one as it comes. So first one is asking, if core inflation is higher than last month, what is the support and resistance of Nasdaq and STI? So I believe the question is, what is the support and resistance level of Nasdaq and STI that you are looking at, Kong Hao?
Maybe for that, I will just share with you the chart for the STI. I think that will be a bit more pragmatic approach here.
Right.
Let me see if I can do that. Okay. And I hope that you're seeing the STI chart right now.
I'm seeing your screensaver right now. Hold on. I think you shoot for a moment and then you switch to a screensaver.
Oh, okay. Got it. How about right now?
All right. Yes.
Yeah. Okay, so what I'm going to do here is this thing here. Okay, first of all, let me just focus on STI. Earlier I mentioned about, you may find that for those who enjoy trading the stocks, which I enjoy trading the stocks, but I also enjoy trading the US market. But more of my position for the Singapore market is to accumulate them, to hold them. Okay, for those traders like to trade the Singapore market, I have this strategy for you. And Singapore market is not boring. Let me just share a few reasons why here. Okay, first of all, that was the last crisis, the subprime crisis that rebounded. But can you see that over the span of 10 years, more than 10 years by now, you may find that Singapore market is boring. So, but can I share with you, it's not boring because you have to recognize that Singapore market is in this range stage, right? So after range stage, what's the next stage here, which I believe that the inflation is not going to go away soon. The very proposition that I'm going to offer you is very simple reason. If you're going to ask yourself or ask your family members who is already working so they understand the value of money, or ask your colleagues or even taxi driver, the people that you use their service. You ask them this question, very simple. You say, Mr. Tyne or Miss Lee, what do you think of the food prices will be 5 years from now? or 2 years from now, 3 years from now, you just ask them this question: will the food prices be more expensive? Do you think they'll be more expensive or the same? I think 90% will say that it'll be more expensive. Okay, just based on this very simple logic, most of us understood unknowingly that inflation will here to stay and may get worse. Simple logic. So inflation will stay. So I'm seeing that based on what we studied earlier on this 3 risks is real. And therefore, I only trade the US market means that I get in fast, I get out fast when the tide change. But I do believe that Asia market is in better hands if you talk about long term. So that's what I earlier shared, that this will be the range stage and that will be a value. And at the moment, I think during the COVID, we have created some value. And I believe that given time, I'm going to see growth. The transition of power, which is already happening right now. I saw some question about the China market. I'll address that later. There's a transition of power finances from the west to the east. That's what I'm seeing from the market here. So, but of course, it will take time. Now, let me just go back to those trader in the Singapore market here is that, of course, over the last 10 years, we could see that the US market is up and down. Well, I talk about US market because they are the largest market in the world. So it's important to respect that market as well. But for those traders trading the Singapore market, not forgetting that if you time it to the up and down of US market is in line to the last 10 years, they are 1 cycle, 2 cycle, 3 cycle, and now we're getting the 4th cycle. Can you see that? I'm not too sure you can see my cursor. 1 cycle, 2 cycle, 3 cycle, 4th cycle. So what I'm suggesting here is that if those that enjoy trading, not too short term, Singapore market also have its cycle. So around 2002, 2005 or 2006, start to accumulate. Around 3005, 3006, you start to offload. So if you enjoy doing some mid-term trading in the Singapore market. But I think the time is getting nearer and nearer. Let me just draw something quite exciting here is that I'm seeing this technically. Okay, so fundamentally, which I described to you very briefly here, is that we are good in the way that we have all the, let me just give you some proposition as a foreign investor, all this hot money out there. If something happened to the global market, the hot money is still there. Where would they flow to? I'm seeing that they flow to Singapore, one of the favorite destinations. Why? Because of the strong Sing dollar. There's value in buying Singapore stocks. So that's an important point that we have to take note. And as I draw, technically, you could see that there is like the market is narrowing down. Can you see that? So once it hit a certain as it range over the years, so do not be do not lose heart that Singapore market is boring. It's not boring at all. But once it break, it may start to move. So which I'm glad that all this session are recorded. Maybe 5 years down the road, I'm still in this relationship with CIMB. I think I will able to play back the recording. So to see if we are on the right track. Which therefore, when I accumulate Asia shares, why I say accumulate Asia shares, especially Singapore, is because I'm not too concerned of the downside risk. If the inflation continue to pick up, that may spell some trouble for the stock market, but I'm not too worried for Singapore stock market on its downside rate. I will continue to accumulate Asia's Singapore stocks. So I think we spoke about the first question, if the core inflation is higher last month, not just last month, but if it continued to, just now we studied from 9%, it come down to 3%. And for the last 6 months, it has been hovering at 3%. It seems like it's plateauing. Is it going to move up? Nobody knows. Now, during my last session, someone asked me, Kon, how you are indicating that inflation is going up. So I make that correction. I say, no, I'm not indicating that inflation is going up. I'm just suggesting the possibility, what would to come. Because if you're going to ask Jerome Powell that if inflation is going to move up or move down the next few months, you know what he was going to say here? That every conference I've been writing transcript of every word for word he said. Now I became him because for every conference I've been writing his transcript. And if you're going to ask him, Jerome Powell, is inflation is going to go up this year, next year, or are you going to cut interest rate or not? You know what he's going to say? Because I know him so well that I think I'm able to utter what he's about to say. It depends on data. It depends on the incoming data. Data by data, we will have meeting by meeting, and then we'll decide there and then. This is what he's going to say here. So I'm not indicating that inflation is going up, but I'm suggesting that look at the variables, the elements that we discussed about that. It really depends on the unfolding of the geopolitical tension that we have and what would that lead us. So we have to monitor all the situation and data from point to point, and we have to be fast to react, especially for the US market. But for Singapore market, you just talk to your broker. What are the good stocks, got growth potential? I think technology is still in it, but make sure that as you buy and hold, you also buy and hold those that pays dividend. So as you hold, at least you don't get to shortchange that nothing's happening. Yeah, but something may happen in the near to far future. So I think that settle question number one, which I do not think I want to talk about the NASDAQ market, but I think I completed the STI market.
Right, Kong Kao. Maybe you can move to the question from Roger, because since we are on Singapore market, he's asking, can invest in Singapore banks and REITs? Which are the top 3 REITs? Are you able to maybe not specific if you can, but how would you look at that market or that sector?
Okay, I think in a rising interest rate environment, my favorite industry, it is not banks. Yeah. In a rising interest rate environment, my favorite counters is not bank. Now, you may say that, well, if interest rate go up, they may earn more money. Not exactly true. But what you could see here is that example of the bank runs in US, I think that was 2 years back. It was because of the rising interest rate, and that caused the bank some trouble. Okay, so bank is not exactly my favorite, but if you want to invest in banks, do look out for this strategy that I mentioned earlier. The Singapore market have this tendency of finding support about 2004, 2005. I'm not too sure if it's going to come back. So every time crisis, load up the bank. So for banks, you have to know when to load them up. It's during crisis. Not now, the times are good. It will not have much upside. Yeah, the growth is not there. But security is there, but growth is not there. So not exactly my favorite. I will talk about REITs, but maybe I will not suggest which are the top 3 REITs. What I can do is that you should call your broker to ask them to suggest you the top 3 REITs. But let me just talk about REITs, how to select them. Now, first of all, you understand about REITs. REITs, their model is not for capital gain. Now, first of all, okay, the model is not for capital gain. The model is for income. So same thing, you can apply this strategy every time crisis, look for the REITs to buy. Yeah, because if you happen to have a capital gain, it's just the way it is because there's demand, but it's not supposed to price into the REITs. Okay, so if you have to understand about REITs. Now, then how to get into REITs at this point in time is that in the context of, say, for example, I think in the rising inflation with interest rate may stay or move up, then REIT selection became important. Select for those REITs that have lower gearing. Lower gearing means that with interest rate to stay or higher, those with heavier borrowings, it means that they have to pay more interest to the banks. And that will derive lesser net profit to pay out to you as an investor dividend. So look out for the REITs. We look at their model, their renting model, all this and that, yes, but also look at their debt as well. Hopefully the debt is not too great. So I can't suggest which are the top 3, but I think the broker should be able to help you. I think that concludes the question from Roger, right? Yeah.
Right. Yeah. Let's move to the next one. I'm not sure whether you are able to take this, but just let me read it out from Jean Lick. What do you think on the downward trending price of street trading? Should I buy in and hold this stock? So he's asking about specific stock.
Okay, then I will give you a case study on technical alone. Okay, so I will not go into the fundamental of straight trading. So maybe if you are still with my chart, we're going to apply what we've learned throughout the 1 hour, 15 minutes earlier. Let me just type straight trading here, and we're going to do some technical study. Yeah. So I may not able to advise you individual stocks, but based on case study, on technical study, we can just have fun analyzing the chart alone itself. And it seems to me that the straight trading company on technical front, and I may want to include the volume. Okay, let me just get into the quarterly chart to get a feel of where's the market at right now. Okay, when we analyze the market, it's okay to derive no view as a view. Yeah, so when we analyze the market, you don't have to force yourself to come up with a view. Yeah, but of course, if your question is that you have straight trading, you are stuck, and what are we going to do about it? Then based on this chart, let me just look at the case study that I can offer you. Now, if we're going to look at a timeline across 1980, 87. Okay, so these are like force break. It tests. So you try to break above. Maybe I just adjust a bit higher here. Yeah. So there are few major resistance that each time it tests. On this particular year in 2008, of course, we know what's happening. There was a subprime, but there was a crisis. Then everything just hang there, and you could see that how well resisted about 350. So as we able to get data, we get into the history, we're able to see a lot of data point. And this was a subprime, means that it's people are chasing after the housing bubble, and then it crashed. And after it crashed, it always resisted about 355, and that was a major resistance. And the second major resistance was at 386, so it touched and it started to come down again. So therefore, I think the next question, I do not know what are your position that you have for straight trading, but just based on very technical point of view here, I'm not too sure if you're finding support around here. But definitely, I think the market based on the historical trend, if I'm going to narrow down to a bit further the downside, it don't seem good to me because the selling itself on the volume is very strong. Yeah, so I think there's some news. I'm not too sure what's the news because I do not follow this particular stocks. But therefore, I like to look at the price behavior. So when you look at the price behavior of this, you're able to recognize what are the major resistance. But if I narrow down to the micro picture, since you asked me today, and today itself, I think there's some news that's going on. If not, if there's no news, it could be there are some internal news that is not announced to us, that there are a lot of throwing down in the market. And I think there's still more downside to go. Based on what we analyze, technically, I think the next support that we're seeing based on the historic, there will be some support about $1 about there. Yeah. So fundamentally, do check with your broker. So I think this is something I think is a good question. Lick Long, right? Is a very good question. But I also want to showcase to you how we apply all this to work. Yeah. Just based on trend line.
Yeah, great. I think that's a very good case study for TA analysis. Yeah. Okay, there's a question, anonymous. I think this one you might have already covered just now, but just let me read it out and maybe you can confirm. So the question is, as you indicated, Singapore market might finally move to the growth stage in years to come. Certainly, we may need at least one of the bank stock as they take up big portion of STI. So I believe the question is that just now you're showing that Singapore market could go into a value and growth stage. And I believe the question is asking we can actually at least get our hands in one of the bank stock to take a position.
Yeah, so definitely if that's your belief system, do go for it. It's just like over the years, I still remember I was in Hong Kong in 2015, 16, sharing with growth fund managers. And I did say that, of course, fund managers, they're asset fund managers, they're into stocks. But my topic is about gold market. And they enjoy the topic, but they can't bear to to adopt it because their fund managers, asset managers, they do not buy gold. Gold do not pay dividends. So, but my proposition is that yes, I know that you do not buy gold. Gold is not part of portfolio, but it's good to know, to know that gold is an inflation hedge. So it's always good to have a fraction of your, if you're a decision maker, it's always good to have a fraction of gold in whatever portfolio you have. So what I'm trying to say here is that not many people believe in gold or precious metal, but I do. So based on my conviction, I do not have a lot of gold based on my whole portfolio, but it's a fraction of it. Yeah, so today it has yield some result, but I think there's more to come. It's just the beginning. So same thing if our context is that Singapore market bank is one of the hot deals. Do choose one bank. We don't have many options. There's only 3 banks to choose. Choose your favorite bank. If that's your conviction, go for it. Personally, I may have some banks, but it may not be the main portfolio that I have. Yeah, because I would like to invest in those that have growth. Yeah, because if you look at the Singapore, certain industry the growth is a range market. Yeah, so around the top you should sell, around the bottom you should pick up to collect dividends. So I think certain industry the play are you got to adopt the range investment strategy. Around the bottom, you pick up because they pay dividends. Around the top, around the range, you try to let go because you receive some capital gain, let go of it, be happy about it. Accident, uncertainty, global uncertainty may come again, then the market will drop, then I will pick it up from there. So certain industry are that kind of play. For example, like REITs, banks is one of them, but certain industry will have growth. Yeah, so just now what I suggested there was, remember the SGX filter facility that they have, that they don't just have growth, tech stock have growth, but they also pays dividend. To me is like double the bonus. Why not, right? So yeah. So yeah, great question.
Okay, great. Maybe let us quickly move to the one on Hong Kong. So the question is talking about Hong Kong and China stock market. What stage are they in right now? Is it accumulation? Should we consider the support and resistance when identifying the stages?
Okay, a good question. Maybe what I go here is that I go to China market, right? Yeah. China A50. I like China A50 because of course, if you like to trade China A50, SGX also have a China A50 index. Yeah, you can trade that if you want to. But let's look at the China A50 index itself. So what do you think about the China market based on this chart? Yeah. Okay, let me just share with you how it works. Yeah. China market is ahead of Singapore, and I believe there's a time of range about there. Yeah. So there were a value. That's where China, Hong Kong, Shenzhen connects. That's where the world investor can start to invest in China shares through Hong Kong until today. This was a period where I was there, 2015-16, to get ready for that connection. So I did some work over there. So if you ask me where is China today, it is in the growth stage. Let me just share with you. Structurally, yeah, but of course, in growth stage, there will be up and down. So what we could see that but as long as that every down is a higher low from the previous low, it qualified the growth stage. So to me, China's growth, of course, you say that you have all the reason that China is very bad for the last 2 years. But if you look at it very strategically, what is the Chinese government trying to do the last 2 to 3 years? Why are they making their property market so difficult, the education market so difficult, the gaming market so difficult? I'm going to narrow down to their property market. Back in those days, the property market was very hot. You know that suddenly I can't remember the big name. Is it China Evergreen or something like that? What's the name again? China, anyway, you know what I'm talking about. Suddenly I can't remember the name. It's a big name, China Evergreen or something like that. And they curb on all this property because they are heavy leverage. And I think the Chinese government do not like that. They do not like companies that based on leverage, huge leverage to grow their company. So why are they coming in so strong the last 2-3 years? Because I believe that they're also seeing what we're seeing here. What I'm seeing here is that inflation is here to stay. If it allows the property developer and the consumer, the end consumer, suck into it to buy at a high on borrowed money on a rising interest rate, and that will spell trouble into future in the economy. So what I'm seeing that over the last 2-3 years as a long-term investor, I welcome that move. Basically, to get it going for Asia, you better clean up the whole system. In the financial market, which you are doing right now, in the property market, yes, you can have borrowing, but not excessive, which I welcome that move. But of course, over the last 2-3 years, it brought a lot of pain for the Chinese market. But to me, I like it because short-term pain, long-term good. That's what I'm saying here. So if you look at it structurally, is in part of my equation here. And that's why I've been accumulating into Asia stocks. So once again, I think thank you for all this question. I think your question helped me to wrap it up very nicely.
Right, right. Not sure, Kong, how do we have time for
Maybe one last one? Yeah.
one last one?
Yeah.
Okay. So maybe let's pick the one on crypto. What's your view on crypto coins? Should one have some percentage of that in the portfolio?
Yes, if you have, I have this weekly case study. In fact, before the Bitcoin started to move up, it was also part of something like this. Bitcoin, I would say that it's Bitcoin. Bitcoin is part of the crypto. So Bitcoin has its run. So it kind of it come down something like this, but now it's on the way up again. So in our weekly case study, we did spotted Bitcoin, but now it's on the run. So not exactly, I cannot endorse Bitcoin cryptocurrency because to me, it's still a very new thing. But between gold and cryptocurrency, so cryptocurrency became a second in line of inflation hedge. That's what I'm saying, because people believe that the currency are failing. Uh, uh, that's why the central bank be buying gold, but cryptocurrency became a second in line. So I will want to have a more stake in cryptocurrency until I see this, until I see that the blockchain technology, because there must be certain fundamental behind it. But now it's based on a bit more perceived and speculative move. If I want to see that the actual things start to happen, which is the blockchain start to infiltrate more of the world, that more of the world using blockchain technology. So when it started to happen, then cryptocurrency became more are able to tie a value to it. Because a very basic reason is, if you're going to ask me, or I ask an expert about cryptocurrency, can you give me the intrinsic value of cryptocurrency? Then he look at me, he blink his eyes, and no way. There's no way I can calculate the intrinsic value. So it means that it's still based on perceived value. Yeah, so you can have fun with it, but I believe that cryptocurrency is up and coming. Let me just give you one example. Relate back to the dot-com boom. Dot-com boom happened in year 2000. Then the idea was there's online shopping. But year 2000, there's no online shopping. So it was just a hope. So now the cryptocurrency is a hope of the blockchain technology will pick up tremendously. Then after that, the market crashed, which Bitcoin crashed already. Yeah. So when the dot-com bubble crashed, because of the hope of the online shopping, it crashed in 2000. It took the online shopping on NASDAQ 11 years until 2011, 11 years. Until 2011, that's where Alibaba tie up with PayPal. Then that became Alibaba became possible, the B2B business in wholesaling with PayPal. Then people start to recognize that online shopping is possible in 2011, 11 years after the dot-com boom. So what I'm trying to say here is that the blockchain technology, until I see that start to happen, then I will throw in some serious money. If not, it's more to me, in my personal understanding, is that I will have it as a fraction of my portfolio. Yeah, so that's based on my own understanding. If you understand more about crypto, Bitcoin, just go ahead. Yeah, whatever your conviction speaks to you. Okay, I think we are done with all this wonderful
Right.
interaction.
Okay, great. Thanks, Kong Hao. And I think it's 9 o'clock on the dot as well. So once again, allow me just do a quick share. But of course, once again, thanks, Kong Hao, for your wonderful insight sharing. I think it gives us a lot more clarity about how the market is panning out right now. And I'm sharing also the feedback. So just a quick reminder, we really would love you to do the feedback forms. Take a couple of minutes to give us your feedback. And if you are keen to attend next week's session with Money Hero, do register for yourself for the Zoom webinar as well. So with that, I'd like to wish all of you a good evening and a good week ahead. And thank you everyone for your participation. And thanks to Kong Hao also for his wonderful sharing. And we will see each other again soon. Kong Hao will be back next quarter. So do put your questions or themes or topics you want him to touch on, and I'm sure he will try to address those next time. So with that, thanks everyone. Good night and take care.
Thank you. Bye.
Bye.